John Crypto here. Brace yourself, because what you're about to see is not a market correction. It's a full-blown financial heist in plain sight. Silver, the so-called safe haven, just imploded. From its all-time high on January 29th, it's down a staggering 33%, erasing nearly half its value in a matter of days. That's right. A metal you thought was stable, a hedge against inflation, a cornerstone of portfolios, blown to pieces in what Wall Street wants you to believe is normal volatility. But let's unpack the truth they don't want you to see. Here's the kicker. Behind the headlines claiming weaker U.S. retail sales and slowing demand lies a 820 million ounce shortage. Production cuts in Mexico, Peru, and China have choked global supply, leaving a vacuum that paper contracts cannot fill. Current prices sit at $80.9 per ounce, yet the math screams for a $3 to $9 explosion if real supply and demand collide with the forces quietly hoarding this white metal. Now, the lie being sold to the public is textbook deception. The mainstream media wants you to believe this is just a market adjusting to easing inflation and softer consumption. They paint a picture of calm, rational investors and sleepy traders. Don't buy it. That narrative is a smokescreen. The truth is far uglier. Forced liquidations in late January wiped out nearly 50% of open interest on COMEX. Vaults emptied, positions were crushed, retail investors panicked and sold at fire sale prices while whales and institutional predators were quietly scooping up physical silver and ETF-backed holdings. And if you think this is just market fluctuation, wait until you see the data on volume and open interest. Futures contracts outnumber physical silver by multiples. Paper silver dominates. That means for every ounce of real silver in vaults, there are dozens of promises floating around in the system. An entire paper fantasy leveraged against reality. When prices move, the retail crowd bleeds, the smart money wins, and the vaults slowly drain. Now connect the dots. U.S. Treasury Secretary Scott Bessent admitted that Chinese speculative activity is driving extreme swings. Translation: foreign money is exploiting the chaos while domestic retail is trapped in margin calls, panicking over headlines spun to keep you selling. Meanwhile, real silver is vanishing from global supply chains. Jewelry, electronics, photography industries are scrambling to secure metal for production, yet you're being told, relax, it's just a correction. Here's where it gets even nastier. January's liquidation didn't just erase open interest, it wiped out confidence. Investors who thought they were safe holding paper silver found themselves underwater, forced to sell into a market engineered to punish them. The irony? The same institutions that orchestrated the collapse were quietly loading up on physical silver and ETF positions, knowing full well that the panic they created would guarantee them maximum accumulation at minimal cost. Retail traps versus smart money moves. That's the story they never tell you. Your friends, the news analysts, are highlighting a softening GDP, stalled retail sales, weaker consumption, as if any of that explains a 33% wipeout in a metal that should be non-yielding and defensive. No, the real story is manipulation at scale. The COMEX vaults are bleeding dry, leveraged paper contracts dominate the market, and the same entities that engineered your loss are sitting on the sidelines smiling, holding stacks of physical silver that will become exponentially more valuable the moment supply and demand collide. And here's the part that will make your head spin. Despite all this carnage, the potential for upside is insane. 820 million ounces missing from global supply is not a typo. With production cuts continuing, global demand relentless, and retail too terrified to enter, the stage is set for a $309 silver explosion. That's more than a triple from today's levels. Yet for now, the media will keep whispering, wait and see, and the public will sit frozen, unaware that they're standing in the middle of a heist engineered by banks, traders, and manipulators with billions at stake. So if you think the 80.9 price tag you're seeing right now is normal, think again. Because what you don't know is that the real story is not in the charts, it's in the vaults. Physical silver is vanishing. Open interest is manipulated. Paper contracts dominate. Retail is trapped. Whales are stacking silently. And this is just the beginning. Think this price action is normal. Wait until you see what's happening to global supply. Part 2 exposes the crime scene inside the vaults. But if you think that liquidity flush was bad, wait until you see what's happening inside the vaults. COMEX and London inventories are bleeding dry. Registered silver inventories are at near-record lows, evaporating in plain sight while the public is distracted by headlines about soft consumption and weaker GDP. Mexico, Peru, China, Australia, the big producers, have all cut output, tightening global supply like a noose around retail investors' necks. Every ounce leaving the vaults is disappearing into private hands, and the market doesn't even notice until prices spike. Here's the kicker. Paper derivatives dominate this market. Futures, options, leveraged contracts. 10 times more silver exists on paper than in reality. That means when prices move, retail holders get trapped in margin calls, forced to liquidate at a loss, while banks and institutions profit off the chaos. Every dip, every panic sell, every headline is engineered. This isn't volatility, it's a predatory trap, executed by the same players who claim to protect markets. Now connect the dots on the villains. BlackRock, JP Morgan, even the Fed itself. They're exploiting the January liquidation like professional sharks. While retail is bleeding, these institutions quietly buy cheap, stacking physical silver, while the public panics. Selling pressure hits, price collapses, headlines scream, crash, and then, poof, they quietly accumulate while nobody is watching. A classic bait and switch, and the East isn't sitting idle. Shanghai premiums are spiking. Chinese and Asian buyers are absorbing physical silver aggressively, taking advantage of every paper-based liquidation in the West. What you see on the price charts in New York is a reflection of paper manipulation, but the physical metal is quietly moving east, disappearing from COMEX vaults and industrial channels alike. Here's the historical echo. Remember 2008? Retail investors panicked, banks quietly accumulated distressed assets, and the market rebounded violently afterward. 2020? Same story. Forced liquidations, Fed intervention, institutional stacking. Even FTX collapse follows this pattern. Engineered panic, retail losses, whales scooping up the distressed asset. January 2026 is no different. The same blueprint repeats. Manipulation, retail panic, central accumulation, inevitable price rebound. Now think visually. Vaults emptying, paper contracts multiplying, retail investors trapped like prey, whales and banks holding the real silver like a loaded gun. Every spike, every dip, every headline, it's a calculated move, a play in a global heist where only insiders profit and the public bleeds. While the West wrestles with volatility, the East is quietly stacking, absorbing millions of ounces that will never return to these paper markets. And when supply finally meets real demand, prices will explode and the Western market, paper-heavy and retail-trapped, will feel the shockwave first. While the West battles volatility, the East is quietly stacking. What this means for the global balance of silver is shocking. And while the East is quietly stacking, the flows tell a story that's invisible to most investors. Shanghai premiums are surging, signaling that Hong Kong and Chinese buyers are dominating physical silver absorption. ETF inflows from Asia are hitting multi-year highs, while Western vaults continue to dwindle. Every ounce leaving COMEX or London finds its way into these secret accumulation channels, leaving retail and institutional players in the West scrambling for scraps. Here's the kicker. The buyers are not just hedge funds or visible institutions. Unknown wallets, offshore entities, and central banks are quietly amassing silver, creating an artificial scarcity that the public only sees when the price moves violently. Every panic sell, every liquidation, feeds this clandestine accumulation. The market looks chaotic, but in reality it's a carefully orchestrated squeeze, stacking the deck in favor of those who control supply. Now connect the dots to policy. Delayed U.S. jobs and inflation data are dictating the Fed's next moves, and every sign of weaker consumption or slowing growth nudges expectations toward looser monetary policy. That's music to the ears of silver holders. Why? because in a world of easing rates and softening dollars, non-yielding metals suddenly become the ultimate hedge. Meanwhile, export restrictions and geopolitical tension, Mexico, Peru, China, throttle supply, turning what should be a global commodity market into a controlled, manipulated battlefield. And it doesn't stop there. Mining and production difficulties are worsening the deficit. Key producers continue cutting back while industrial demand in electronics, jewelry, and photography refuses to relent. Every ounce is contested. Every spike in Shanghai or Hong Kong is a reflection of real-world shortages, not paper speculation. The East is quietly hoarding. The West is trapped in a cycle of panic and liquidation. Now here's the part they don't want you to see. This isn't just about silver prices. This is a direct threat to the US dollar and fiat systems. A tangible shortage of silver exposes the fragility of paper currencies. Metals, once thought to be a niche investment, are now a global lever against the dollar. Every ounce hoarded in the East, every ETF inflow, every clandestine central bank move signals that the West could be caught flat-footed when reality hits. Think about it visually. While COMEX vaults bleed, futures contracts dominate, and retail panics in New York, Shanghai's warehouses are filling, premiums spike, and invisible players are stacking what will soon be impossible to acquire. The West is selling, the East is buying, and the Fed is reacting, not controlling. This geopolitical shift isn't gradual. It's a storm building, and once it breaks, volatility will look tame in hindsight. And here's the cliffhanger, the part that will blow your mind. With global debt levels exploding, central banks scrambling, and physical silver quietly vanishing into unknown hands, the mathematical imbalance is already set. The 300 trees per ounce target isn't speculation. It's not hype. It's not a dream. It's a direct consequence of production cuts, industrial demand, geopolitical maneuvering, and the unstoppable flow of silver from west to east. With global debt exploding and central banks scrambling, the next part reveals why $309 per ounce isn't a dream, it's a mathematical inevitability. And now it all comes crashing together. US debt just eclipsed $38 trillion, and interest expenses are climbing faster than most realize. Japan's bonds are wobbling, and sovereign debt across the globe is at record highs. There is no safety net left. Every central bank, every major institution is trapped in a system built on leverage, speculation, and endless promises of liquidity that can't exist. The West is holding paper, the East is holding reality. Here's the kicker, the Fed is boxed in. Weaker US retail numbers, stalled GDP growth, soft inflation, every signal is nudging them toward easing. But this is no ordinary monetary policy. Printing is the only tool left, and every new dollar debases the currency. That's why silver is quietly moving higher. Paper collapses, real assets gain value. The same system that crushes retail margin holders is fueling the very explosion of value that the smart money and Eastern central banks are quietly stacking. Now connect the dots. The system itself is broken. Fiat fails, leverage amplifies every move, and retail is caught in a trap they didn't even know existed. When forced liquidations hit, panic spreads, and the dominoes fall, only those holding real assets, physical silver, gold, crypto self-custody, survive intact. The rest? They're left holding paper promises that evaporate in the storm. And the numbers don't lie. With an 820 million ounce deficit, ongoing production cuts in Mexico, Peru, China, and the relentless accumulation from Asia, the path to $309 per ounce isn't a guess. It's a mathematical inevitability. When supply finally clashes with industrial demand, when panic sells stop and accumulation dominates, prices will spike violently. Months, not years, could see this metal triple from current levels. Here's the call to action. Step away from banks. Move into self-custody. Secure your silver now, because waiting for the media or the next correction will mean missing the explosion entirely. Every ounce you hold in hand is a hedge against fiat failure, leverage collapse, and a collapsing system designed to prey on the uninformed. And the mic drop, the truth that nobody wants to say. When paper fails, only truth remains in your hand. real silver, real freedom. Every headline, every liquidation, every panic spike was engineered to separate you from it. But now you know. The math, the flows, the global hoarding, and the macro debt picture all point to one unavoidable conclusion. The West will feel the shockwave, the East will control the metal, and the 309th target is already written in stone. This isn't speculation. It's the final warning. The system is failing, and the next few months will reveal who acted and who simply watched their wealth evaporate. If you want to stay ahead while the system collapses, hit that subscribe button now. Don't just watch the chaos, be ready for it. Smash the like button if you're stacking silver or thinking about taking control of your wealth. This isn't financial advice, it's survival strategy. And share this with anyone still trusting the banks, the media, or paper promises. The more people who see this, the fewer will get caught in the trap. Remember, the market is rigged, the system is broken, but knowledge and action are your only weapons. Stay alert, stay liquid, and keep your metal close. Subscribe, like, share, because when paper fails, only truth remains in your hand.